You are watching programming from the East-West Center in Washington, D.C.
And good day, good evening to many of our colleagues joining us both on YouTube and on the Zoom platform from wherever you are. We welcome you to the East-West Center in Washington's webinar this morning, Asian Development Bank's Outlook for 2021, a discussion with Chief Economist Yasuyuki Sawada. We are delighted to have this program this morning, this day. My name is Satu Limaye. I'm the Vice President of the East-West Center and the Director of the East-West Center in Washington. So welcome to you. You can imagine that creating a development outlook for the region of Asia in this time is fraught with perils, but we have been delighted to have Sawada Sensei with us on many previous occasions, as well as his colleagues. And today we also are delighted to welcome Lesley Bearman Lahm, the North American representative of the Asian Development Bank, to kick off our program. It's an extraordinary time in the middle of the pandemic with global changes of all kinds buffeting regional economies. And so we're very much looking forward to the insights of Sawada-san and his colleagues for this report. But before we do that, let me please invite Lesley Bearman Lahm to open up and kick us off as we get started. As you'll know, she is the North American representative from ADB, and she has a distinguished record with the ADB, serving in a variety of capacities, and is trained as a lawyer and an East Asia Studies expert from Columbia University. Ms. Lahm, please, over to you.
Thank you, Satu, and good morning, evening, and I suspect perhaps afternoon to all, depending on where you might be today. As Satu mentions, I'm the representative here for ADB's North American Representative Office. I thought just before we got started today with the presentation, I would first provide a few brief words on what ADB does, both here in North America and in the region. We are a multilateral development bank established in 1966 and headquartered in Manila. We're a regional development bank, and our mandate is to foster economic growth and cooperation in the Asia-Pacific region, as well as contribute to the economic development of our developing member countries, or DMCs for short. Our work currently is guided by what we call our Strategy 2030, which expands ADB's vision to achieving a prosperous, inclusive, resilient, and sustainable Asia and the Pacific, while also supporting efforts to eradicate extreme poverty. In the North American Representative Office, or NARO for short, we have a few main functions, and predominantly our role is to mobilize financing and support for ADB's developing member countries and our operations and activities in the region. We share development knowledge and experience, and this is one example of that role. Establish and deepen partnerships with public, private, and nonprofit organizations in North America, as well as raise public awareness of ADB with our key stakeholders here in the United States and in Canada. And we are very grateful to Satu and the East-West Center for hosting this event today. We very much appreciate this. The Asian Development Outlook, or ADO, is ADB's annual flagship publication. It analyzes economic and development issues in Asia. This year, the special theme chapter is on financing a green and inclusive recovery. And today, we are honored to have ADB's Chief Economist, Yasuyuki Sawada, present the ADO highlights to us. Dr. Sawada is ADB's Chief Spokesperson on Economic and Development Trends, and he leads also ADB's Economic Research and Regional Cooperation Department in Manila. Previously, Dr. Sawada was a professor in the Faculty of Economics at the University of Tokyo. He also worked at the ADB Institute in Tokyo and was also a consultant at the World Bank with the World Bank Group. He holds a doctorate degree in economics and a master's degree in international development policy, both from Stanford University. And I'm delighted to turn this over to Dr. Sawada for his presentation. Thank you.
Thank you very much, Lesley and Satu, for a very warm introduction. Good morning, good afternoon, good evening, everyone. I'd like to thank East West Center for having me today. And also, in the last few years, actually, I had a chance to join East West Center events in DC and also in Hawaii for Asian Development Outlook. Last time I joined was 2019 October, when we released Asian Economic Integration Report in Manoa. Very nice to return back to East West Center, even virtually. Thank you very much. So today I'd like to share with you the main message of Asian Development Outlook, or in short, ADO 2021. And I'd like to start with the summary of the key messages from ADO 2021. So here is the 5 key messages. First, COVID-19 cases in Asia started rising again in March earlier this year. The slow start to vaccination campaign adds to concern that pandemic may be far from over. Secondly, economic recovery has started, but prospects diverge within the region. Some economies, especially China, are returning to normal and seeing growth boosted by exports, while others are contending with domestic outbreaks and dampened tourism. Third, regional growth is expected to rebound by 7.3% this year, developing Asian countries and economies, led by China, before moderating to 5.3% next year. Inflation will remain generally benign as substantial slack holds back price pressures. Fourth, the main risk still centers around the pandemic, including a renewed outbreak or delayed vaccine rollouts. Finally, but not least, long-term scarring from COVID-19 is also a big concern. The report's theme chapter looks at how green and social finance can help lay the foundation for more sustainable and equitable recovery. So next, let me walk you through some charts that illustrate these 5 main points. So let me start by a pandemic. Left chart shows the evolution of pandemic. The black line in left chart shows the new COVID-19 cases in developing Asia, which peaked out at 106,000 last September. Successful containment measures cut the number down to 32,000 by end February 2021. But in part, because of new variants, cases surged again up to 93,000 by end March. And actually, end March is a cutoff date for the ADO 2021. And actually, main figures I'm sharing with you is based on this ADO cutoff date, end March 2021. And the COVID cases has continued rising since the earlier this year. This highlights the pandemic is far from over, basically. Right chart shows the vaccine rollouts that are still in the very early stages, and progress in the region varies quite considerably. Many economies are facing difficulties in procurement and deployment, while a handful of small economies, bars at the top on the right chart, such as Palau, Bhutan, Maldives, these small countries have vaccinated a substantial share of their population, but the other countries, most large regional economies, have not really rolled out at the massive scale. Developing Asia has administered, on average, 5.2 doses per 100 people. And this is below the global average of 7.7 doses per 100 people as of end March. So now let's look at the economic performance of last year, year 2020. Amid the pandemic's ups and downs we observe, Asia is actually experiencing economic revival through, although there are uneven trajectory. So in this chart, we put 10 largest economies figure, Q1 to Q3 quarter, first quarter to third quarter last year. GDP growth was shown in yellow dot, and Q4 fourth quarter GDP growth is shown in the white dot in this chart. So you can see how earlier last year and end of last year, how GDP growth changed. So yellow to white, what's the change for these 10 economies? Year-on-year GDP growth in Q4 improved in a majority of the economies, as we can see. And actually, out of 10, 8 countries, we see a bounce back of economic growth. Q4 improvement was particularly strong in the regions, the two largest economies, China and India. You can see from the left end, PRC and India. And now we can also see ingredients of GDP growth and from the demand side. This bar chart, blue part shows the consumption contribution of GDP growth, and orange is investment contribution, and the gray shows the net exports. Actually, improvements came from both the domestic and external front. Contribution from a private consumption, again, blue parts in this chart, became a less negative or turned positive for 7 out of 10 economies shown here. And also contribution from the investment, orange bars, improved in 7 out of 10 economies. On the external side, net export, gray bars, were biggest boost to growth in Q4 in the case of 7 out of 10 economies. You see, gray has quite positive improvement. Indeed, external demand for manufacturing products contributed rebound of net export for PRC, Republic Korea, and Singapore, and Taipei, China. So these are 4 Asian tigers, plus PRC export seems to be really an important driving force of a strong recovery. So in order to zoom into this recovery, we can see the manufacturing recovery. So left chart shows the Purchasing Managers Index, or PMI, for manufacturing. Blue line is a global PMI. Black line is PMI for developing Asia, excluding India and PRC. Manufacturing activity increased steadily through the second half of 2020 and stayed in expansional, positive territory in early 2021, according to the left chart. And this upturn in manufacturing activity has gone hand in hand with the strengthening trade. We can see from the right chart, global and regional export have rebounded. In this right chart, black is global export, and the green lines shows the Asian export. Both rebounded in last year. But actually, red line in the right chart shows the PRC. Export really soared for the PRC, and we see this very strong, particularly strong recovery of export for China. The region's export recovery was first driven by a surge in the export of medical supplies and protective equipment, PPEs, and then followed by a recovery of electronics products. So, there's more granular information about the export recovery. If you're interested, you can get more granular information from EDO report. But this meant regional benefits are unevenly spread. East and Southeast Asian economy that export PPEs and electronic products saw very strong gains, but the performance in Central and South Asia was less good. So this also highlights a divergent path of recovery within the Asian region. So continuing external front, remittances. Remittances in the region were also relatively resilient, it turned out, and did not collapse by 20%. Some had forecast at the beginning of the pandemic. In the first 3 quarters of 2020, developing Asia's remittances were actually increased by 0.7% year on year. And you can see from the left-hand side chart. In some economies, left-hand side chart, vertical axis is the percent change of a remittance year on year. You can see some countries such as Pakistan, Bangladesh, and Azerbaijan located in a positive territory along the vertical measure. So these countries, Pakistan, Bangladesh, Azerbaijan, remittances increased quite substantially. Having said this, remittances also declined substantially in some Central Asian economies below the horizontal line, the countries which encounter decline in remittances. So Central Asian countries such as Tajikistan, Uzbekistan, Kyrgyz Republic actually remittance decline. And these countries, remittances account for a large share of income. So that seems to be turned into a big negative impact on the GDP. So right chart, move on to the right chart. Unfortunately, tourism arrival. Tourism shows a little sign of a bouncing back, as you can see from the right chart. Tourism arrivals have remained depressed since April last year and have risen only in the Maldives. Maldives is shown in the red line. And the Maldives opened up a country last July. But even in Maldives, international tourism arrivals are still down 40%. And in other economies, tourist arrivals are still down 90% to 100% total muted. And this contributing to a severe recessions in tourism-dependent economies, such as Georgia, Maldives, Thailand, and other several Pacific Island economies. So these are the some domain-specific picture of a pandemic. And then, so looking forward, what's the our outlook for growth? Actually, overall outlook for growth is positive. After 0.2% contraction for the first time, contraction for the first time in last 5 decades, developing Asia, due to a progressing slow but continuous vaccination rollouts and recovering global demand and increasing in exports, these elements will foster rapid economic recovery in developing Asia this year. Growth is forecast at 7.3% in 2021, which is much higher than average growth before COVID-19, 2015 to 2019. Partly, this very strong growth, 7.3% this year, we envision, can be attributed to comparison with weak 2021. 2021 slightly decline, and GDP level decline. So starting from a lower baseline, because of this, by nature, growth rate will be higher. So 7.3% can be partially attributed to a lower baseline effect. And then next year, regional growth will moderate to 5.3%, and excluding newly industrial economies, 4 tigers, regional growth is forecast at 7.7% this year, and 5.6% next year. So these are basic forecast. But the growth trajectory will not be uniform across sub-region, as you can see from this table. Central Asia, Southeast Asia, and Pacific are projected to see moderate growth this year, and then picking up next year. But some deceleration is expected for East Asia and South Asia next year, 2022, after this year's relatively strong growth bounce back. So that table showed the growth trajectory, but actually another way to document divergent recovery paths within a region is to look at the not growth rate, but the level path of GDP. This chart shows the GDP level trajectory. Left end chart shows the region as a whole, and 2020 growth rate was minus 0.2, so very slight decline or almost flat GDP level. This year we envision a rebound in regional growth, and then next year moderate growth rate. But left-hand chart, red line shows the this recovery still leave GDP below its pre-pandemic trend. So in other words, recovery will be incomplete over 2-year horizons of ADO forecast this year and next year. Within the region, GDP trajectory for China, second from the left, the green line, actually looks quite good. There was no decline last year, and growth rate slightly declined. So actually, slope of GDP level slightly slowed down last year, but Chinese GDP will get quite close to the pre-COVID trend by next year, and recovery seems to be complete next year. Contrast that with India, showing the blue line, second one from the right. India encountered very severe recession last year, and then started recovering this year. So despite a sharp rebound this year, actually 11% growth rate we envision for India this year, but you can see 11% growth is far from complete to pushing up GDP of India to pre-COVID-19 trend, as you can see from the second from the right blue chart in this slide. For the rest of the developing Asia taken together, showing purple line on the right end, contraction last year was so sharp, but the rebound is also more modest. So again, a recovery is incomplete, especially except China. Recovery would be incomplete. And what's the risks to this forecast? Current environment is highly uncertain, so risks, overall risks still remain tilted towards the downside. The main risk to the outlook is obviously unfavorable evolution of the pandemic. Significant and protracted outbreaks may require renewed mobility restrictions that will slow down economy, and the vaccine rollouts may also face challenges in procurement and deployment. Also, vaccine hesitancy, according to some survey, vaccine hesitancy is not necessarily negligible, and also weaker effectiveness against the new variants. So vaccine rollouts may face challenge from now on. Other downside risks include geopolitical tensions, especially between US and China, political turmoil, supply chain bottlenecks, and tightened financial conditions, including a possible repeat of the taper tantrum. There is also a risk of longer-term scarring from the pandemic. This ADO 2021, we put the two special analysis focusing on medium and long-term issues. First one is a special analysis on learning and earning losses arising from the pandemic, arising from pandemic-induced school closure. And also same chapter examines challenges to ensuring adequate investment in green recovery, inclusive recovery. So let me turn to these two medium-term, long-term issues from now. So now about the school closure. As we all know, COVID-19 pandemic has severely disrupted education. Schools were closed to varying degrees, as you can see from this chart, showing fully closed or partially closed total number of days. In a quarter of the region's economy, schools were closed for 200 up to 300 days. And also in another 1/5 of the economies, schools were closed for even a year or more. Only a handful of economies managed to keep schools open continuously, especially right end in this slide, the Pacific region. Remote learning strategies were used immediately after the school closure, but many students in the region, low income, especially low income students, are constrained by a limited access to computers and internet. Our analysis finds students in Asia have so far lost 29% of a year of learning on average. Learning losses varied across the region. In South Asia, where the school closures have been longest, students lost 55%, more than half of the year of learning. Schools mostly stayed open in the Pacific, as I mentioned, where learning losses were relatively low at only 8%. So we see quite big variations. But school closure and lost learning days, I think that's a very, very serious issue already emerged. So in this report, we made economic impact assessment. What's the likely medium-term and long-term economic losses? Because those learning losses will induce a future productivity and earning losses. So students cannot learn at school, so that will undermine human capital accumulation and then losing future income. So we did quantitative assessment. According to our estimates, students affected by school closures stands to lose on average $180 per year, or 2.4% decline in expected annual earnings. $180, if looking from the developed economies, high-income economies, you may think this is not substantial, but indeed, if we consider income level of developing Asian countries and economies, $180 can be quite substantial. And also, supposing a student after completing a school join the labor market for example, 45 years, then this annual losses cumulatively aggregated up to enormous economic losses. So we did this calculation, present value of the future earning losses over the life cycle of these affected students. Total amount adds up to estimated 1.25 trillion US dollars for whole developing Asia. And this is equivalent to 5.4% of the regional GDP in 2020. So enormous 1.25 trillion US dollars losses in total we predicted. Of course, this is based on a certain scenario. So we set the optimistic scenario, online learning can be improved. And also after school open up, students can recover these lost school years. And also we set more pessimistic scenarios. So there are some variations, but three scenarios we postulate here. After all, our estimates tells us learning losses and earning losses will be quite substantial. So now let me, as a final segment of my presentation, let me quickly go over same chapter of this year's ADO titled Financing Green and Inclusive Recovery, which explores the drivers, impacts, and prospects of green and social finance in Asia. So let me start by mentioning COVID-19 pandemic really disproportionately affected the vulnerable people. And in order to build back better, specifically, I think many people are focusing on building back a greener, green sector and green activities. We need to put more emphasis. And also recovery should be more inclusive. No one left behind, and poor people can gain out of this recovery efforts. This is an estimate by UNSCAP. After all, Asia Pacific region needs to invest 1.5 trillion US dollars annually, or 4% of regional GDP, in order to achieve a SDG target by 2030. So if a region can achieve a SDG target by 2030, I think that means the completion of building back better. But the 1.5 trillion US dollars, enormous amount of resources are needed. As you can see, clean energy, climate action, direct and indirect poverty programs, health education, transport, ICT, or even biodiversity, including ocean health issues. So 1.5 trillion US dollars resources are needed. But obviously, 1.5 trillion US dollars cannot be financed solely by public resources. So both private and the public resources will play very important role. And even with the government revenue declining during the pandemic due to massive response programs by the government, private capital needs to play a more important role in financing green and social investment in building back better. Actually, green finance and also social finance for poverty reduction type of finance, actually we see green and social finance has been expanding quite rapidly around the globe. And also Asia leads the expansion in emerging markets. Left chart showing green bond issuance, and Asia accounts for around 1/5 of the global green bond issuance. And Asia left chart, blue part is Asia. And the right chart shows the two things. First, yellow bar is 2020. And the right chart shows the social bond issuance. We can see there is a spike in 2020, big jump in 2020 issuance of a social bond. And also Asia, excluding international multilateral institutions, right chart showing a supranational, that's an international organization. Excluding multilateral institutions, Asia now the second largest regional social bond market after Europe. So actually, this is really happening already. And one important driving force of this fast expansion in green and inclusive finance is changing stakeholder preferences. For example, more investors want their investment to perform well, but at the same time, their investment can tackle these social and green objectives. Currently, 30 trillion or so, or 1/3 of all investments managed globally. 1/3 is guided by ESG objectives and principles, environment, social, and governance, ESG objectives. Also, on firms side, supply side, firms are tapping green and social finance in order to protect against sustainability risks. And in this ADO theme chapter, we put the many data analysis showing that firms investing in green and inclusive segments. For example, firms issuing green bond, that type of firms can gain economic returns, reducing financing costs from the capital markets, and also generating some tangible outputs. So farm side, there is some, I think, emerging incentive to invest in social and green markets. Also, farms now have a big appetite to attract patient investors. And this overall generating greater resilience through downturns like current pandemic. So some big change has been happening already in the green market, and then now we also see a social financing market. Also, we see some major structure change. Actually, same chapter have a number of technical data analysis, which shows the viability of green and social finance. But same chapter also provides a new evidence. Green and social finance generates overall positive environment and social impacts. One example shown in the left chart, Asian firms that issue green bond improve their average environment and environmental performance score, internationally comparable score by 17% over 1 year and 30% over 2 years. So actually, a green bond issuance can generate tangible environmental positive impact. And also data from China and statistical analysis from China shows that Chinese cities that issue more green bonds see a significant improvements in air quality, which turn into the health benefit. So we show some technical data analytical results. And social bond schemes is shown in the right figure in this slide. Innovative instruments like impact bond help achieve a social impact efficiently. Typical social bond shown in this right segment of this slide. Investors shares the risk of a green and social investment with the public sector or donors and service providers. And actually, one example, we put the detail explanation is the social bond in India called the Educate Girl Development Impact Bond in India, targeting social objective of girls' education, female students' education, and then depending on achieving targets, investors can gain tangible monetary return out of this investment. So these are the really innovative products we are observing. And so now same chapter concludes by examining policies that can support further development of social green financial markets. And the policy options are shown, summarized in this slide. So left segment basically said legislation and regulation can help align finance with SDGs while also safeguarding financial stability. Basically, policymakers need to develop and also enforce common standards for information disclosures, impact measurement that are aligned with the existing international standards and promote sustainable finance as a regional agenda. So green bond should be certified and also monitored, and also information disclosure associated with the green output and inputs that should be set in a transparent manner. So policy framework play a very important role. And also government can proactively incorporate these sustainability risks into macro and micro prudential frameworks. And also, after all, government's role is to set and also strengthen market infrastructure and ecosystem for viable green market, green capital market, and the social capital market. Another side of policy is public resources. So as I said, $1.5 trillion should be financed both by public resources and private resources. So left part is talking about the role of government to mobilize the private resources, basically setting market infrastructure. And the right segment in this chart shows the government can also directly mobilize SDG financing resources. Broadening and protecting domestic tax base and enhancing tax compliance, developing a more transparent and efficient tax administration. Also, striking a balance between raising tax revenue, promoting investment, and strengthening international tax cooperation. Now, because COVID-19 lockdown, digital platformers and big tech companies gain a lot. So, how to tax and redistribute this tax for financing green recovery and social recovery. So I think mobilizing domestic resources and also even international tax cooperation play a really critical role. So these are the policy options for nurturing green and social finance in Asia. And so final slide, this is a recapping point I already mentioned, 5 key messages. Number 1 is renewed outbreak tells us pandemic is far from beaten. And secondly, we observe a quite divergent economic recovery in the region. And number 3, this year and next year, looking forward, Asia will strongly return back 7.3% growth, and then next year, slightly moderating economic growth. But at the same time, we see quite large variation of growth recovery this year and next year within Asia Pacific region. Number 4, main risk still centers around the pandemic and basically renewed outbreaks and delayed vaccine rollouts. These are the main source of risks. And finally, long-term scarring from the COVID-19 is a big concern. So education and how to fill the gap of lost school days. I think that's a very important issue. And also financing green recovery and inclusive recovery towards the end of SDG, end the year 2030. That's a big issue. And private markets as well as the public resources play a very, very critical role. So this is overall main key messages of ADO 2021. So thank you very much for listening, and I'd like to stop here, and I'm very happy to take questions at this point. Thank you very much.
Sawada Sensei, thank you so much for that terrific overview of the report, and particularly that quite innovative and interesting green finance section as well. So many issues, so many fascinating data points that we'll come to, but I want to move straight into Q&A because we have a few on, and we have approximately 17 minutes, so I want to make sure we get these questions. Just folks, please bear with me. I will read these because many of our viewers are joining on YouTube live stream and cannot see the questions in the Q&A. So the first question is from the distinguished Professor Vikram Nehru at Johns Hopkins SAIS. He thanks you for your excellent presentation and asks 2 questions, Sawada-san. 1, how well have ADB's growth projections in previous years done in relation to actual outcomes? So this is sort of the gap analysis between your outlook estimates and the actual figures. And second, how have sovereign and corporate debt burdens increased in Asia during the pandemic? And how will this impact future GDP growth? Servicing of those government as well as business debts. So why don't we start with those 2? Those are 2 big questions already, and then we'll turn to Mr. Scott Seaman from International Business Advisors.
Yeah, thank you very much for very, very important questions. How well have ADB's growth projection in previous years done in relation to the actual outcomes? Actually, last year, it was a very unusual year. Basically, we rely on multiple information to build up our growth forecast. Quarterly, GDP number from the actual quarterly GDP number, and also based on some structural model and other information, we compare our growth forecast. But last year, since the basically WHO declaration of a pandemic on March 11th, actually situation of a pandemic really evolved unexpected speed. So what we have done is actually we started using because the GDP quarterly number is too slow and also too infrequent. So what we started doing last year was to tap innovative data, big data, basically mobility data, Google mobility reports, daily mobility information can be used. And also another source is Oxford University's government containment measure index. That's a daily index, which is a composite showing that internationally comparable manner, showing the level of lockdown in different sectors like workplace closure, school closure, etc., etc. So we started using this information to supplement and more frequently update our growth forecast. So after all, I think our forecast converged to a reasonable level. And the December ADO supplement, there was a final forecast we have done. And we set the minus 0.4% growth over developing Asia. And then earlier this year, we kind of pinned down actual outcome, minus 0.2% growth rate. So I think after all, we could make a reasonable projection. And second question, how sovereign and corporate debt burden increased in Asia during the pandemic? Actually, Asian governments soon after outbreak of COVID and also WHO declaration of a global pandemic, Asian governments started putting a huge amount of policy packages, both fiscal measures as well as monetary and credit measures, because lockdown, which was necessary to control pandemic, really inevitably slow down the economy. So in order to support household and the business and keep people alive, basically in economic life, government started putting a huge amount of resources. And we started tracking policy measures as ADB COVID-19 policy database since April last year. And then we updated twice a month this policy database. And according to the latest database figure, Asian country put out in total 3.7 trillion US dollars, which is around 50% of GDP in announcement base. Fiscal measure, monetary and credit measure, liquidity measure, altogether 3.7 trillion US dollars. And actually, this inevitably increased the fiscal deficit. Actually, fiscal deficit of developing Asia doubled last year. And then leading to accumulation of public debt GDP ratio. And actually, end of last year, public debt GDP ratio reached 65% of GDP. So actually, this is really a big concern. But having this said, actually pre-COVID situation, public debt situation was relatively modest in Asia. So still, there has been a relatively large fiscal space to adopt this enormous policy package. And also 65% public debt GDP ratio. If we compare with other regions, I think this is still modest. So I think this is worrisome. Accumulation of public debt is worrisome, but at the same time, I think at this stage still it's a manageable level. And I think it's very important looking forward. Government, I briefly touch upon domestic resource mobilization. I think at some optimal stage, government needs to switch the gear from fiscal expansion to fiscal consolidation. Although seeing COVID-19 is still a challenge. I think it's not the right timing to switch a gear. I think looking forward, the government should prepare for this transition from fiscal expansion to fiscal consolidation. And then private debt situation, actually, it's a little bit difficult to capture overall picture systematically, but I think there has been a big concern on accumulation of non-performing loans, especially micro enterprise. Actually, we released Asia SME, small and medium scale enterprise monitor, Asia SME finance monitor last year, 4 volumes, based on our granular data collection of micro, small, and medium enterprises. And that report also data shows debt stress has been looming especially among the micro enterprises. So I think a big concern is how to tackle upcoming accumulation of a non-performing loan, and government needs to prevent NPL accumulation turning into the financial crisis. So I think that's the big issue. Yeah.
Right, Sawada-san, thank you very much. Let's turn to the next question from Mr. Scott Seaman at the International Business Advisory Group. He asks, how is and this speaks to your chapter on particularly on green growth and financing, how is the increased Biden administration and global focus on combating climate change, including via multilateral development banks such as the ADB, affecting the ADB stance and policy approach to supporting projects involving fossil fuels versus renewable or cleaner energy? In specifically, how will the ADB shift away from fossil fuel projects by revising its rules criteria for evaluating which projects should receive support? And if so, what is the process and timeline for such revisions? I imagine you weight these factors in making decisions about financing. So I guess Scott wants to know how soon these new guidelines and weightings will be incorporated into financing decisions for projects.
Yeah, thank you very much. So this is also a very, very critical issue, especially for ADB. I'd like to respond in maybe two, three angles. First, actually, according to the data, Asia is still based on fossil fuels. I think latest data, according to the latest data, Asia account for around 50% of global GHG gas emission, and also Asia's energy source, roughly 50%, is still based on the coal. So I think building back greener is a really important agenda for developing Asia. And actually, in other words, I think because Asia depends on these dirty energy sources, so for Asia, there is a huge room to transform. So that's the first thing I'd like to mention. And secondly, ADB has been already committed as a part of a strategy 2030, as Lesley mentioned. And ADB has a explicit targets. And ADB committed to provide $80 billion US of cumulative climate finance from 2019 up until 2030. So ADB committed to support this green transformation of Asia. And having said this, 2020 number, partly because of COVID-19, ADB committed $4.3 billion US, out of which $3.5 billion is for mitigation and $0.8 billion for adaptation. So probably ADB needs to further accelerate this climate finance. $80 billion US commitment needs to be accelerated. And also, probably ADB needs to consider the balance, more balance, putting more weights on adaptation, not only mitigation. And then also ADB is now reviewing and renewing energy policy which is kind of obsolete already. So I think more formalized framework will be upcoming, and that framework can support this 80 billion climate, green and resilient climate finance of ADB. Yeah, thank you. This is a very, very critical area.
Yeah, thank you, Sawada-san. And I would just note to our...
Okay, Lesley, would you like to add?
Oh, sorry, Lesley, please.
Yeah, no worries. I think Sarah just shared our energy policy. Just to supplement, we are, as Sawada-san noted, in the process of updating our energy policy, and that is actually online, and people are very welcome to review and provide comments, and we do take those comments on board in the process of updating that policy. Thank you.
Yeah, well, wonderful. As you said, Lesley, the link to the ADB's bank draft energy policy has been put in the chat. So I encourage our panelists, I beg your pardon, our participants to please access the link there, and you can, as Lesley said, comment. I despair, because it's such a fascinating and such a substantive conversation with Sawada-san and Lesley, but we must take this as the last question. We're 3 minutes out from the closing time. So we have a colleague from Osaka University in Tokyo. It's now late at night there, as it is for Sawada-san in Manila. And our Shah Sardar Ahmed of Osaka University asks, what sort of problems are Asian emerging economies facing in incorporating green finance and ESG cost calculations into their financial markets themselves? The chapter in the ADO 2021 said that countries like Pakistan, Thailand, Philippines are slow in aligning financial systems with SDGs. What are the reasons behind this, and what can global governance institutions do to support in this regard? That's the question for you, Sawada-san, and then we'll close on that, and I'll close with just a couple of quick announcements. Thank you.
Yes, this is really a core issue. Although we see development of green finance and inclusive finance, but rather slow, speed is slow, especially lower income countries and developing countries and economies. I think overall, it's necessary to build up a market ecosystem to incentivize the investors and firms to utilize the green finance and inclusive finance. So I think a government can play a very, very important role in order to attract private sources. Again, setting transparent criteria, and also adopting international standards, and develop and enforce common standards for information disclosure and impact measurement. I think these things are really necessary to set up a very, very clear and transparent and robust market ecosystem. So I think ADB and the public sector can play a very important role to nurture these domestic, green market. And in different contexts, ADB has been supporting a local currency bond market since Asian financial crisis 25 years ago. So I think a similar approach, supporting a market infrastructure development, I think that's really indispensable. With that, I think it's natural for private investment is coming in, because globally huge amount of assets are available, and they are eager to some bankable project and viable returns. So I think having a very sound market ecosystem, I think it's really doable to attract global investment flowing into developing Asia's green market and inclusive social market. Yes, thank you. But this is a very important question.
Thank you very much, Sawada-san. Ms. Lahm, may I invite you? Do you have any comments to close the session before I make some general closing comments? No. Well, thank you both for joining us this morning. For Ms. Lahm, and late in the evening, Sawada-san, thank you for staying up so late there in Manila to once again bring us the update on the economic outlook in Asia. We have very much enjoyed, as I've said, partnering with your North American office and with you in Manila and your colleagues on numerous reports and findings. As you well know, the East-West Center was established by the US Congress to promote better understanding and relations between the United States and Asia. And I can think of a few better ways to do this than to learn about the ADB's work on Asian economies and have our participants interact with you. So thank you once again. We look forward to future opportunities to collaborate and cooperate with you on such programs, whether they be virtual or in person, on new reports, and of course on future economic outlooks. I do want to say that the East-West Center covers a lot of turf. I couldn't think of a clever way to link this economic outlook report to the next series of webinars that we're hosting. We host, as you know, a range of webinars on all types of topics. But the next series I just want to flag, and I've put it in the chat as well for folks, is an upcoming series on North Korea's external relations. We started last week with North Korea's relations with the Global South, a very fascinating book by Mr. Ben Young. And now we will continue with a series throughout the summer on North Korea's relations with Malaysia, Vietnam, Syria, Guyana, Southern Africa, and the post-colonial world, just to mention a few. And it's part of our North Korea and the World website, which we're delighted to work with in cooperation with the National Committee on North Korea. We will also, of course, highlight other programs that we're in the process of finalizing and scheduling. So we welcome all of you to join us in the future, but also thank you wherever you are and whatever time of day you are for joining us today. And once again, thank you to Sawada Sensei and Ms. Lahm, and we bid you safety and good health. And see you.
Thank you. Thank you, Satu. Thank you, everyone.
Very much.
Stay safe, stay well.
Bye.
Thank you. Thank you very much.